Joining us now to chat that out is David Zervos. He's the Chief Market Strategist at Jefferies. Happy New Year. Good to see you.
Happy New Year, Sarah. Good to see you as well.
How are you feeling about the market? I kicked it off talking about how the bar is high. It doesn't mean we can't surpass it because we started out expensive last year too. But what do you think? What do you think happens here?
Sarah, I think it was a great segue you had. You basically talked about how everybody came in talking about these valuations being high, and then we went even higher. I think rates have come down. They came down quite substantially across the curve, almost 100 basis points in the front end and 50 or so in the back end. And if you continue to believe that those rates are coming down, as I do, then we can see PE multiples rise. That's part of the way PE multiples rise, is when you have lower interest rates. I think the neutral rate structure is getting debated as we speak. It was lowered last year by many in the market, and I think it will continue to lower back toward its pre-COVID levels, which are closer to 2% than 3%. And that is great news for stocks.
You think rates will continue to go down more than the market thinks rates will continue to go down? Or expect pricing in now 2 cuts?
I do. I think that the market and the Fed have overestimated neutral since COVID, and they've kind of sloppily done this exercise because they raised rates so much, things didn't break, so they just assumed neutral went up. They didn't assume that their whole concept of how to calculate neutral was incorrect, and it was because of the balance sheet. Now that the balance sheet is back to neutral, I think rates will come back to where their pre-COVID neutral levels were. And again, that is closer to 2% than 3%. And I think that iteration, that process of iteration started this past year, which is why rates have come down and why folks were actually very wrong about interest rates. You saw a lot of 5% forecasts for 10-year yields last year, 5.5%, even more, and people talking about rate hikes even over the course of 2025. That all went away. And we saw the rate cuts. We saw rates come down. I think that process is still ongoing. And we are going to have a more dovish Fed. We're going to have a new Fed chair, a new Fed governor, maybe even 2 new Fed governors, depending on what happens with Lisa Cook. And I think they'll be much more inclined to focus on the supply side and those lower neutral rate structures that I'm talking about.
So you think that's the key? The key is that we will see lower rates from the Fed and, David, lower market rates as well? Because there's some question about, what happens, especially at the long end of the curve, even if the Fed cuts.
Yeah, I think the long end is really getting kind of taken over by the Treasury. I think there's a lot more Treasury focus on the long end. Secretary Bessent has said that from the beginning. I think he's done an incredible job in the first year of curtailing some of the risks that were entering into the long end of the bond market. He has the tool of issuance. He has the tool of buybacks to really beat back on the bond vigilantes of sorts or foreign nefarious sellers. So I think the long end will be very much in control, under control. And by the way, Sarah, even without that, inflation expectations are down. Inflation expectations, the forward break-evens, the surveys, they're all coming down. The inflation data has gotten better and better, much to the chagrin of the haters. And I believe that's going to continue. I think there's a lot of reasons to believe that monetary policy is still restrictive, and that is keeping a lid on some of the interest rate sensitive sectors that is keeping inflation more in check and heading lower. And so I think the Fed needs to be thinking about that, especially with this other narrative that you and I have talked about, which is the fact that a lot of the productivity gains are making this much more a jobless economic growth story than a job creating economic growth story. And I think the Fed will pivot more to that as the year goes on.